Andrew Maguire, British commodities trader and whistleblower, sat down with Zero Hedge to discuss the growing gap between the world of physical gold and the on-paper gold trading world. While big traders were expecting gold prices to climb, there was a massive sell-off at the end of September. Maguire mentioned that this started when big traders looked like they were cut off guard by the big sell-off. This isn't normal since these insiders often know about official moves in advance. Now, here's where it gets more interesting. Even with all the selling, insiders were actually buying more gold. It looks like some big central banks' orders were triggered once prices dropped below 1900. Basically, central banks saw a sale and they went shopping. That central bank is the Central Bank of China. They've been on a gold buying spree. China has been smartly making moves, encouraging their entire population, all 1.4 billion of them, to invest in physical gold. Imagine if even a fraction of that population started buying little bits of gold, it would create a global gold supply shock. And this isn't just about individual wealth, it's about China strengthening its economic backbone. Looking at the bigger picture, all these moves suggest that there's a shift coming. The big banks are getting ready for a golden 2024, and it seems like Russia's gold game is on everyone's radar right now. Russia has been accumulating gold for years, and it's a significant part of its strategy to reduce its reliance on the US dollar and bolster its economic defenses. Russia, much like China, recognizes the value of gold as a hedge against economic turbulence, especially in these geopolitical charged times. In recent years, they've also started the fascinating gold for oil barter trade. What's this about? Instead of trading oil for US dollars, Russia's been brokering deals when they've got gold in return for their oil exports. It's a clever move, bypassing the dollar and building up their gold reserves. This isn't just about shifting away from the dollar, it's also a way for Russia to sidestep some of the Western sanctions. This gold for oil trade effectively circumvents these sanctions, allowing Russia to continue trading without being too hamstrung. Speaking of sanctions, let's not forget the geopolitical context. With tensions simmering between the West and Russia, particularly over issues like Ukraine and cyber warfare, Russia's gold accumulation is a show of strength. It sends a clear message. Russia is not only resource rich, but it's also preparing its economy for anything, and it's getting prepared to move away and get away from some of these sanctions and also some economic pressures. In the bigger picture, as Andrew Maguire pointed out, this gold accumulation by Russia and China is steadily depleting the gold reserves, especially the immediate delivery bullion supplies. This is creating a subtle yet powerful shift in the gold market dynamics. When you combine Russia's actions with what's happening in China, you can see the contours of a new global gold landscape. Both nations are positioning themselves for a future where gold regains its crown as the king of financial safety. In the short term, we might see more market fluctuations and some unexpected moves, but there's one thing that's for sure. Russia and China's golden ambitions are a game changer, and it's going to be riveting to see how it all plays out. The one that seems to be lagging is the Fed, but they've been making moves to get speculators to shoulder most of their risks. Compare now to last November, and there's a clear pattern. Every major player is going long on physical gold. It's almost like everyone's prepping for something big. And that leaves us with the one burning question: how much physical gold do you own?